Hey everyone, it's Nick with Us versus Herd. If this is your first time here, hit the subscribe button. If this video is of value to you, hit the like button. I definitely appreciate it. If you're not yet a member of our free options trading group, the link is below, along with the link to our new Discord channel. Just getting things going here. It's the UVH live stream. If you're here right now, say what up. I see some people in here. Saw 7 Day, FC, Samuel, Dustin. Let's see who else is here. Richard, Chetan, Maureen, JDM, Elvis, Ray Lee. What's going on? If you're here, say what up. And it was just crazy day. Josh, what's up? If you're new here, say what up. Definitely like to meet everybody. Pardon the gifts behind me. Got Christmas gifts stacked up behind me. Bunch of toys. Jordan was up on the day, then came out even. Chetan, what's going on? Alex, how you doing? Glad to see you. Hamed, hope everyone is surviving the 2018 apocalypse, the melt your face right off events of the stock market, whether long or short. Chicken Wing, what's up? The last one of trading saved me was down on put, sold, and got calls, barely finished with net 200, but nice. Nice. Richard, man, thank you for the $10. Really appreciate it. Thank you so much. Hope you're enjoying Jamaica. Bring back some of that warmth here. In Chicago, it really hasn't been that cold. It's just today it was raining, and let's just say it hasn't been that great of an experience. But I'll take it. I mean, it's been like 40 degrees here. You know, technically in Chicago, you know, we can be below zero right now, which kind of scares me for January and February. It might get scary. It might get scary. We might be below zero for weeks, and we'll want to die. But Carmine, welcome. Crypto Slice, Richard, Greg, Linda, you made it. Warm and sunny on the coast. Man, I wish. Anyways, on track for a foot of snow today in Minnesota. Wow, that's sorry to hear, man. Sorry to hear. I will not complain. I will not complain. Jedgoski, Chicago, what's up? Oh, you're Connecticut. Sorry, I read that wrong. My apologies. Aman, how you doing? All right, so let's get into it. As you can tell, I mean, the last hour and a half of the market we just ripped up, which my positions are thankful for. And the title of today's stream is "Not Taking Profits is Poison." And if you look at my live stream yesterday, you know, I was up over $300 per account yesterday. However, I only realized, how much did I realize yesterday? I only realized, I got to check on it, but it wasn't a lot. I think I realized yesterday won $100 or so. Hamed, thank you for $5. Appreciate it. Thank you so much, Hamed. You've been supporting me. Richard's been supporting me day one. Really appreciate it. So yesterday I had a IBM trade on, I had a Microsoft trade on, I had an SPX trade on. $95. I closed out for $95. So yesterday I closed out my credit spread on SPX for $95. However, I left on IBM and Microsoft. IBM I was up $166 and Microsoft I was up $57. And as you can tell, this morning we were struggling a little bit because IBM, let's pull that up. IBM and Microsoft, along with the rest of the market, both gap down. Even though I was in the money, we were going to be down some money. So let's get into the trades here. So I actually closed. If you guys can see this here, I actually closed the day down $72.50. However, most of that was just unrealized profit. What I will say is, this was the result of me not taking my profits from yesterday and me reacting to what was happening today. At one point today, I was down over $300 per account. I think that the most I was down today was like $305 per account, which is just crazy. It's just crazy that you can go from down $300 to only being down $72 within an hour, and most of it was due to this right here. Just the volatility and the increase here. So let's get into it. Let me go into the IBM trade that I put on. So yesterday I opened this IBM trade here, the 109 put, the 109 call, the 104 put for $1.40. I sold it today for $2.02. Max, come on, my dog's in here crying. Sorry about that. So I only got $62 out of this when I was up $166 yesterday. So I left a little bit over $100 on the table. I left like $105 on the table. But I wanted to take profits because I didn't want it to go to break even. I didn't want to lose money on the trade. So I did leave $100. So, by not taking profits yesterday, I increased my risk. I increased my risk because that could have easily went against me. Like if this morning we gapped down and it continued to head lower, I would have been break even. I would have lost all 166 unrealized profit. I would have been break even. I wouldn't have lost any of my own cash, but that's something that you don't want to play around with. And that's one of the things was this week, it's been, I would say, mentally a little bit more difficult week. Not necessarily trading, just a lot of things going on in my personal life. Not necessarily just kind of things out there, but also being the last week of the year, I kind of let loose on some of my rules a little bit. Wasn't as strict and say, okay, well, last week of the year, let's just see what we can do. Let's just kind of relax a little bit. Let's not do it. But as you can see, by not being disciplined, right there, if you look at my stream yesterday, I left $100 on the table, just with this trade here. I then turned around about 10 minutes later. I then put on another strangle, so I realigned my strangle. Obviously now if I left this position, this 109 call would have been making a lot more than $2. I mean, this 109 call. Let's see what this position would be worth at close if I just left it, if I didn't do anything. But obviously in trading, you need to mitigate your risk. So I had the 104 put. Right? Yeah. And the 109 call. So I sold it for $2. It's at close. It's trading for $4.86, which it's just crazy. That's just crazy. But I'm at the same time, I'm glad that I stayed disciplined. I took my profits, and then I rolled my position. I rolled my profits into this new trade. I bought the 112 call and the 108 put. It was bullishly skewed at the time at 8:57 a.m. So, about 30 minutes into market open. I opened it for $1.07, which was I felt was a pretty good deal, and then I closed it out for $1.73 just right at close. So I made $66 or so, 60. It's hard to say here. I have to do the math. So I made about $60, $59, somewhere around there on that. So realistically, I left $40 on the table, so I was able to get some of that money back. Thankfully, I had the 112 call, the 108 put on IBM, and right now IBM is trading at like 113. It closed at 113.78. It's right now 113. So, that kind of shows you what happens. That kind of shows you, right? This trade I made it out alive. I mean, I made profit on the trade. I then my defensive trade, my next trade to kind of get back to where I wanted to go. I made profit on that as well. But I mean, just so you guys know, the market doesn't move like you guys probably know this, but the market doesn't move like this all the time. Like it doesn't move like this every day. Like you don't get these kind of opportunities. So when the opportunity came by to sell for a profit again, I wasn't going to make the same mistake. I then sold it for a profit because I left money on the table yesterday, and it was reckless. There was no reason to do it other than not cash out. You know, like I always say, take profits, redeploy capital. Take profits, redeploy capital. And I broke that rule. And as you guys see, I did make it out alive, but I could have really paid dearly for it. Like I could have definitely lost. I could have lost my unrealized profit, but I could have also lost like my actual money, you know, on that trade. Thankfully, that didn't happen. You know, we had small profits on it, but you know, I'm glad I didn't lose money. But at the same time, you got to stay disciplined, even in highly volatile times, because the volatility just fakes you out. Like people got really faked out today, you know, thinking we were just going to head lower. We're going to give back the 1,000 points yesterday, and then, you know, an hour and a half into close, it just ripped, just insane. As a defensive trade. As a defensive trade to my bullish positions, because at the time I had Microsoft and also bullish position on IBM. I put a bearish trade. I put a bearish trade on Facebook. I have the 119. I'm sorry, I paid $1.19 for it. I had the 128 put, 135 call, and at the time on Facebook, what we were looking at today on Facebook is I put that on at 11:42. So at 11:42, we had this, you know, it tried to spike back up and it failed. And at 11:42, we were just down in this area. We were like on the verge of breaking. We were on the verge of breaking 130. So we were definitely in trouble here. And then it did make a break lower. So I had the 128 put and I bought the 135 put. I bought the 135 call at the daily high, kind of at resistance, not thinking it was going to go there. So Facebook was kind of my hedge against Microsoft and IBM. If Microsoft doesn't get back to even, we head lower, I'll at least have Facebook to kind of hedge against and make money there. So, you know, as you guys can notice, as the market's moving, I'm always adding, adjusting, and evaluating my positions based on where the market is going and where I think it's going to go. So in this case, I had Facebook as a hedge against Microsoft and IBM, and Facebook was heading lower, and then now it came back up here to, you know, it touched 135 after hours, which is just crazy. It's now a little bit lower, 134.33. You know, but I'm up at close. At close, I was up $22 on that position, and it was a bearish strangle. So it's making $22 when it went the opposite direction I want it to go. So that means, that was a crazy move right there. That was a crazy move. So tomorrow I did leave this trade on just because I'm really close to break even. If we're down a little bit, or if I'm close to break even, I'll probably just close it out. I'm not looking to play too crazy on expiration day. That's why I closed IBM and closed Microsoft, even though they're going to make more money most likely tomorrow. I closed those because I was like, I let loose a little bit yesterday and I regretted it and I hated it, and I told myself, okay, we're not going to do that. Thankfully we got out, but you know, you gotta stick to your discipline, stick to your rules, because, you know, we think about the rules when, you know, we kind of let loose and say, okay, well, we left a lot of money on the table, but then we remember those rules when we forget about those rules and how many times they saved us. How many times did those rules save me money? I'm sure it outweighs the amount of money that I could have made, you know, or left on the table. So, I mean, it is what it is. So Facebook, I did leave open. I did close IBM and Microsoft mainly because we're up here, and you know, if it comes down to 134, 133 tomorrow, I'll close it out for a scratch or somewhere around there. You know, not a big deal. You know, even if I go max loss on Facebook, I'll still be profitable on the week. So, you know, we'll see what happens. We'll see what happens with that. But The S&Ps, the S&Ps, you know, right now is 2600 target is very, very realistic, you know. I thought I told people on our Discord today, if the S&P gets to 2500 before close, I was going to give away a $100 Amazon gift card. And it came really close. I mean, we were at 24.88. I mean, that was insane. I mean, it had a 88-point move in, let's see here, half an hour and a half. Hour and a half had an 88-point move. Here, let me get my dog. All right, so Max is joining the stream. We have there's a party going on upstairs. My wife is having a party upstairs while I'm streaming right now, and he wants to join. He wants to join the party. So Max is now joining the stream. So say hi to Max here. He's a Bishan. He's hanging out. He wants to join the party. So. He's a big Bashan. Keith, are we in a bull market? I would say no. we're in a I guess we're in a 11-year bull run technically. But would you say bull market? I would say no. I don't think Kit's here. Oh man, you guys are crazy. Keith, I know I'm kidding. I'm kidding too. What I should have done is sold some calls for around 60 cents, guarantee my unrealized profit against me. Instead, most of them. Hey Jack, how you doing? Gunther, what's going on? If you're new here, say what up. If you're just joining, say what's going on. Hold them up real quick. Okay, you want to see Max? Here we go. Here's Max. Max, you're live, buddy. You're live. You cried your way onto the stream. Matthew, how you doing? I should have stopped at 7:30 profits for the day. Josh, what's up besides the market? Tobin, how you doing? Yeah, I mean, I think what happened here, in terms of the market, we gapped down. Dow was down some 400 plus points at one point. I think it was down 500. I think it was down 500 points at one point on the Dow, and really was faking people out. But however, it was really maintaining, kind of bouncing between range. Like it was bouncing between 2440 and 2420-ish area, give or take. But it was really bouncing in range until it finally broke lower and bounced off 2400. It's days like this. Where you just kind of like, obviously the machines got turned on to buy mode and just started hammering and hammering and hammering. There's no explanation. I mean, there's not really any support here. I mean, it bounced off of 2400. 2350, I could understand the bounce because we did talk about that. 2016, we had a bounce back there at 2350 consolidation area, which we talked about yesterday. But for it to bounce right off at 2400, I was definitely thinking of a retest at 2350. Excellent. What's going on? At 2350, I thought, okay, we're going to break below 2400, as I think the rest of the world. And as you guys know, I mean, that didn't happen. As soon as we broke below 2400, it just got bought up to oblivion. I mean, we just shot right up. I mean, I honestly thought we were going to hit, at the momentum we were moving, I thought we were going to hit 2500 like no time. Like nothing. We were going to hit 2500 like it was going to be nothing. Like insane. Yeah. SC says the day's range was on the Dow was 22 1,200 to 2,300. Yeah. Oh wow. Yeah. 1,000 point range. And then yesterday we had what? We were up 1,200 points on the Dow. I mean, that's just crazy. But the one thing that I will say is, especially for people that are hedging, like this type of market allows you to kind of cover your mistakes. And like people say, Nick, why do you put on so many strangles in this kind of market? Why do you do this? And as you can see here on my position today, my Facebook strangle saved me. Strangle saved me. On most of my positions here. Even though Microsoft did go the way I wanted it to go, and IBM did go the way I wanted to go, but Facebook did not go the way I wanted it to go. However, that position is currently profitable. So just to show you, in this market, if you find the right pricing, strangles will work. Strangles do not work if you overpay and you don't get the movement. Yeah, excellent. Take profit. Short squeeze. That is all. So much interest in short. Excellent. But do you think that there's buybacks happening right now and stuff like that? Because I mean, this is more than a short squeeze. This was definitely. I feel like the way that it moved was way more than a short squeeze. I mean, it was just insane. Josh says feels like a downward move tomorrow, but after what I saw today, yeah. But also today it really felt like after the close yesterday, it felt like we were gonna have maybe 2 to 3 days of green, and then we opened pretty red, which really tricked everybody out. And then they just nailed that thing at the close, and they led people on all day by the little double tops and the resistance, and then breaking through of the 2420 there and just dropping it down to 2400 nice and fast before just and then people, I guarantee you, as soon as it broke, people were starting to lay in short, and then they just got screwed, and then I bet a lot of those people that weren't like going to get margin called, are still holding. And if we have an update tomorrow, like 2,500 plus, I mean, they're going to be feeling a lot of pain tomorrow. They started late to push the market, otherwise it would have hit 2,500. Yeah. This is what happens when you're late. First I fall asleep and lose. See that Nick has been taken over by me. Oh, man. Kit, what's going on? Look at the Google trend. Yeah, excellent. I did look at the Google trend. Someone did share that the picture that says like, how do you short stocks? But keep in mind that those people that are Googling how to short stocks know nothing about how the market works. If you don't know how to short stocks and you're Googling it right now, those people are not closing their positions right now unless they have to, because they don't know what they're doing. They don't know what's going on, and they just got squeezed. But those people that are Googling how to short stocks right now, they are not closing their positions unless the brokerage is doing it for them. Because they definitely got roasted there. Matthew said, I lost my shirt today. Well, Matthew, I know that you had a couple green weeks in a row there, so hopefully your losses, weren't too bad. Linda says, I left my positions on, it's down, but I have time. Yeah, if you got time, you always, I was telling a lot of people in the Discord or on Facebook or whatever group you're part of, say, when should I take profits? When should I do this? And what I always say is you should have a plan before you get into the trade. Have a plan for if the trade goes your way, when to take profits. If the trade goes against you, are you going to cut losses at a certain percent? Are you going to play defense? Are you going to place another trade on something else to to offset that? You got to have that figured out, because if you don't, you trade your emotions start to come out. Your emotions start to get crazy. Like your emotions will be like, well, because you don't have a plan, so you don't have it figured out, and you're trying to put it together. It's kind of like fire drills and stuff. In school you'd have these fire drills. If you don't have the fire drill, you don't know how to exit the building. You're not going to be able to get out safely. But they have fire drills so people don't get trampled, so people don't get killed, and people know where to go during an emergency, during a fire. And that's the same thing you got to do for your account. Kit, appreciate the $2, man. Thank you. Glad you got paid. Yeah, I got that IV Crush. VIX below 30. Nice. Got VIX is still really high though. So Kit, you got some premiums to burn still. But I'm glad you made some money. Will close the year green by cashing in Monday. For them to close the market green, let's see here. What price does it need to be? January 1st, we were... Okay, well, trading started January 2nd, so we opened at about 26.85, 26. We'll just say 26.85, and we got 200 points to go to close the year green, and we have only tomorrow and Monday to do it in. However, to put it in context, I mean they did rip 80. I mean they just ripped 88 points in an hour and a half. So anything is possible. Anything is possible. If they close the year green, that'll just be insane, insane. And then if they close the year green, January is gonna be nuts, nuts. Gunther, I have a problem with staying patient and feeling greedy. You got to work on that. You got to work on that. Maybe I'm weird, but am I the only one that doesn't close contracts but sell the open contracts once I gain profits? I'm not sure I understand the question. Happy Theta Thursday, FC Kit. Monday. So Monday is not early. So just keep in mind, Monday's a full day of trading. Tuesday we're closed. So keep that in mind. Whose birthday is tomorrow? It's my birthday. Oh, Linda, happy birthday. If you're not on the stream, happy birthday. Stay green. Hope you're green on your birthday. That would be nice, huh? Yeah, no more Aman says no more FOMO. Yeah, I mean it's easy, you know, just as in 2017, as you know, and into early 2018, you know, FOMO was real and gets people emotional. And as you know, with like Bitcoin and also like the stock market, you know, you hear about oh my friend's making money every day, but he's not really a trader. He's not really an investor. He just knows we're in a bull market and it keeps going up. And as you can see here, you know, it went from 2419 all the way up to 29, almost 2900, pretty much nonstop. And if you're looking at, you know, last December in January of 2018, we went up every single day. It was obnoxious. It was insane. It was out of control. It was. I mean, we made a lot of money. It was great, but it was not right what they were doing in the market. It was definitely not right. And then in February, traders that had no idea what they were doing and they were caught up in the FOMO and they weren't hedged properly. They had their entire accounts on the line. So why not put my entire account on the line when I made $1,000 and then I made $2,000? Why don't I put $5,000 in? Why don't I put $10,000 in? I could turn that into 10,000, 20,000, 30,000, 50,000. You know. And then their risk is extremely exposed to the market. And then we had the biggest rip down we had in years, which now this seems very small. But at the time, this was just the craziest thing to happen. People were getting wiped out left and right. I mean, it was just insane. I mean, it was crazy. Everyone lost money. So yeah, I mean, the good news, the one thing that I will say, the people that are trading right now are you definitely get FOMO, and that's why you see like the Google trends for how to short stocks popping up, is because that's what's being talked about in the media. But they're going to start, like, newer traders are going to start shorting the bottoms, and they're going to get ripped off. Like, it's just the way that it is. I mean, I've said this many times. The market's goal is to make your account go to zero. Like, they want you. I said in Discord today, they pretty much just want to hang you up to dry and bleed you out nice and slow. And the one thing that I will say, if you started trading in 2018, you really had some two-sided action and you learned how to be a real trader. 2017, you couldn't learn how to trade. Like, that wasn't right. 2018, if you started learning how to trade in this volatility, in the two-sided action that we're experiencing, and knowing, like, hey, the market can't go up forever, but also knowing, hey, the market can't go down forever either. If you think about that, you're gonna be better off. But when people say, hey, we just buy the dip, we go up every day, we just buy the dip, and it's right now it's, hey, we just short the rip, we go down every day, we just short the rip, we go down every day. Sooner or later, you're gonna get caught up. Micah says, I needed to have a plan advice because I typically have no plan. Yeah, if you have no plan, you might as well just take your money, take your money, flush it down the toilet. This is, it's it. There's if you don't have an entry plan, you don't have an exit strategy, and then you don't have a strategy to play defense, I mean, you might as well just close your account. Crip, I need some of that. I just lost my entire 11K portfolio from 2K the past 5 months. I've been trading options, but these past 2 months I blew it all. Crip, I mean, if you stick around, I mean, you'll definitely pick up on a couple of things. I mean, I think you're touching on kind of what I've been talking about is, people blowing up their accounts. And in this atmosphere, it is very easy to feel FOMO. It's very easy to put your account online. And that's why, like, UVH, us versus her, the UVH fam, what we strive to do is keep your emotions to a low, stay disciplined. And if you missed the first part of the stream, you could see, like, yesterday I let go of some of my disciplines and it cost me some profits. And, not that it was big or anything, but it doesn't matter. It could have been big. It could have definitely been a lot worse. I got out of the market pretty safe today, but at the same time, it could have been terrible. And that's why, you always want to have capital into your account to play defense. You want to have capital in your account to move. If you have your entire portfolio, your entire cash in the market invested, you feel kind of like, a tin man. You can't move. You're too heavy. You can't get through what when things go against you. You can't move. But when you have cash in your account, you have liquidity, and you have positions on, you can make decisions. Okay, my Facebook trade, it's not working out. What are we going to do? Okay, are we going to place another trade? Am I going to double down on the puts? Am I going to roll this out to a different expiration? Am I going to sell some credit spreads? Whatever the case is, you need to have cash in your account to roll that. Like, if you put all 11K into the market right now, or what your whole account, whatever that is, you put it all in the market, and tomorrow that goes to zero, it's over for you. And before, like, for newer traders, the one thing that I always like to ask myself, or not so much for me anymore, but one thing that you should ask yourself for newer traders is, if you put on this trade and it goes against you horribly wrong, can you trade tomorrow? Can you trade tomorrow? Or can you play defense? And if the answer is no, you probably should not trade that. You should probably not place that trade. Don't feel bad. I have been brutal. Keep your position size small. Yeah. If you don't learn what you need to for trading, you might go to the corner. Matthew, my strategy is to stay small and never have more than $500 on the table at once, and I take profits often and reposition. Yeah, I mean, today I could have left my IBM trade. on, and as you guys saw, I would have closed it out for more than double or even triple. But I took my risk off and I realigned my portfolio. You know, constant realignment. And I don't mean constant realignment by over trading, just making good decisions, you know, on a daily basis. Yeah, I mean, if you guys didn't see last weekend, I put a video up on our YouTube channel, which you could talk about. It's called Options Trading is a Business, and it's about running your brokerage account as a business, not as your casino, not as your savings account, not as your side money you don't care about. Like your brokerage account should be a business. It should be treated as a business. The capital in there is your inventory. So go watch that video. It's like 4 minutes. I hope it will do you well. When the market's moving, is this the time for a strangle straddle? Also, what's the difference? Doc Sheffield, I've been trading pretty much strangles almost exclusively. I won't say exclusively. I have been doing some small credit spreads and some small naked calls and puts, but strangles have been my go-to since October, pretty much since we hit volatility. Since October, since we've been going back and forth, strangles has been it. But the thing with strangles is you really need to get the pricing right, and you have to understand the move. If you don't know what a strangle is or what a straddle is, I'll just let you know right now here. I'll just choose a random expiration here. A strangle, for those that don't know, a strangle is when you buy a call and a put for the same expiration, but at different strikes, so it looks like this. A straddle is when you buy a call and the put for the same strike for the same expiration. So you have the 249 put and the 249 call in this circumstance, in this instance here. This is a straddle. A strangle would be look like this. So, quick 101. Nick, buy a put on Tesla and use profits to buy Tesla to celebrate the new year. Yeah, Tesla's a tough one. Let's take a look at that. Since I didn't short it when I wanted to, when I said that I should have, I haven't touched it. So we'll see. I don't really like it down here. If it comes back down to like 290, 280 area, I would probably get long. I don't really like to short it here either. Josh, take it easy. I had so much ego when I was up 9,000 from 2K. I ended up revenge trading and everything just went out. Yeah, Crip, I talked about this in quite a few streams, that the people that I would say get lucky or quote unquote or roll themselves into a good position or get gains quickly but not understanding how they got there, they're definitely quick to lose them because they don't actually understand the core fundamentals of trading, and then when things get hard, they get real hard. So that's why it's best to stay disciplined. And if you don't know what you're doing, and if you're new to trading, especially with this volatility, it will definitely tear you apart. There's no shame in paper trading. Open up a paper trading account with Thinkorswim and use the platform. I mean, there's nothing wrong with that. If you're down, if you're down 80-90% of your portfolio, you need to take a step back and say, hey, what am I doing wrong here? Is it my emotions? Is it me? Am I not seeing the market correctly? Obviously you're not seeing something correctly. So, when I start losing like a week, 2 weeks, 3 weeks, if I lose like 2 weeks in a row, or even like 3 or 4 trades in a row, I kind of take a step back and say, okay, what is it that I'm not seeing? And I kind of take my risk back, because once you lose the money, it's gone. I mean, that's it. I mean, it's game over. Many small, consistent trades, the power of long-term compounding, winning percentage, aim for 5% total account gain per week, and you'd be amazed at your account balance after a few months. I agree with that. You can learn a lot from losing. I know I did. Yeah, I mean, 7 day, there's nothing wrong with losing. I mean, we all lose. Every day we lose. I mean, we have positions that lose every day. We have positions that make us money every day. There's nothing wrong with that, but also there's I would say blowing up your account, it's not worth the lesson. There's a lot safer ways. There's a lot safer ways to learn the lesson, besides losing your entire account. And I also have a video. About starting trading with a small account size is the best thing for you, as well, that I posted a couple weekends ago. Watch that. I'll see if I could get the link here. The thing that, while I'm looking this up, the thing that I notice is that people that just are learning how to trade are going in too deep. They're going in 10, 20, 30K, and that's really not where you want to be right now. That's not, you don't want to be in that, you don't really want to be in that thick. Let's go to, oh, here we go. Okay, so I'm just getting this video here. Sorry guys, just want to get this video for you. So that's the video for why trading options with a small account is the best. And then I have the this one is about, that I did over the weekend, about options trade. The options trading is a business. So there's a lot safer ways to lose money in the market and learn from it. I mean, even though a lot of people say like, oh, I can afford to lose the $5,000, or I can afford to lose the $10,000, but I think that that's not really the point. You know, you just say that to make it feel yourself feel better. And anytime you lose that much money, you know, I don't care how rich you are. I mean, I know people that are extremely rich that pinch pennies like no other. I mean, losing $100 to them is, you would think it's $100,000 or $1 million. You know, it's just nuts. King Jacob, paper trading is the best choice I've made. Should be a requirement for beginners start trading with real money. Yeah, I mean, King Jacob, the one thing that I will say is that, you know, people get all, you know, I'm not. People will say with paper trade, I don't care enough when I paper trade. I need to have some skin in the game, and that's fine. If you need to have some skin in the game to care, but you don't want to go $1,000 deep, $500 deep. If you don't know how to trade and you want to trade with real money, you better trade $15 or $20 at a time. You know, and as you know, if you lose 5 times in a row with $20, that's $100. You do that 100 times, that's $1,000. I mean, all this adds up. It adds up. So, you know, even though there's small losses, if you look through like a year or a month or 2 months or a quarter, you know, you're definitely going to get in trouble. The dog's drinking my Coke. The most important thing learned is trying not to be right, but just trading the market. Yeah, 7 days. Yeah, probably the most important thing learned is not trying to be right, but trading the market. Yeah, I mean, like today, for example, you know, I had a strangle on Facebook. I had a bearish strangle. I had the 128 put and the 135 call, thinking we're going to break down, and then it did the exact opposite. And that's why you got to always be prepared for worst case scenario. So many tacos. I recently just started with $500 Robinhood account, just trading options this week. I've been up 100. What percentage gain would you say is reasonable when closing a position? I mean, I would say it really depends on the position. It depends on who you are and how much time you have to trade. Like a lot of times I push my positions. Like most of the time I'm closing my trades between 50 to 100% profit, right? And I also have more time to trade than the average person. I can sit here, I can make the decisions. But if you're at a job or you're at school or you're not going to have Wi-Fi or you're going to be out and about, you want to say maybe lower risk, like take profits at 20%, take profits at 30%. You know, you don't want to get crazy. Because I felt like I need to have skin in the game 2. So far I've lost some. Yeah, I mean, if that's you, just stay small, you know. Team Diet Coke, on your entire account. Yeah, I mean, if you think about it, I mean, most people, if you talk to people and even some hedge funds. If you had your money in hedge fund, there's a lot of hedge funds out there losing money. You put money in there, you actually have less. You have less now than you did a year or two ago. You know, hedge fund managers don't necessarily know the best thing for every type of market. Like everyone, like I have my strengths in certain types of markets. You have your strengths in certain type of markets, and the key is to identify what are your weaknesses. And if as long as you know what your weaknesses is, and I was telling FC the other day in the group is that trading is, you find more about yourself than trading than anything I've ever done in my entire life. You know, you find more about your emotions. You find out what triggers those emotions. You find more of what you can control. You discover more about yourself. And the more you discover about yourself, I know it sounds kind of weird. The more you discover about yourself, the better you will be at trading. If you don't really know deep down who you are, you don't know how to control who you are deep down, you're going to have a hard time. You're going to have a hard time trading. Nick, if your account grows, is it a good idea to keep it somewhat small? I mean, it's up to you. It's up to you what you want to do. You know, you can if you're happy with the gains that you're making, but if you want to scale up your trades and you want to trade different products, you're going to need a bigger account size. Yeah, if you could pull 20% a month, I mean that's amazing. I mean you talk to a lot of people. They're not making 10%. They're not even making 5%. You know, if people are like, well, you know, their 401k is down this year. You know, most people that are very hands off and have money in the market are not making a lot of money this year. You know, yeah, you can make a lot of money in the market if you just buy and hold, and your long-term holding 10, 20, 30-year plan, that's fine. But if you're thinking, how am I doing on a yearly basis? Most people are making 3 to 5%, and I would say that's, you know, most people probably making 1 to 2%, you know, on average. I'm not able to trade the current volatility with a day job. And Greg, if you identify that, if you're not able to trade that, the best thing for you to do is not to trade it, or find trades that you can put on for the long term. You know, that's what it is. I mean, unfortunately, you have the day job that keeps you from that, but it also saves you from making poor decisions where you enter trades. You go to a meeting, you come out, you find you're down 50%, 60%, and you're like, well, what the heck happened? I just put the trade on. As you can see today, you know, you could have went from winning to losing a lot of money in a very short time. And that, you know, that's any environment. You know, on this day here, on what day was this? Last Thursday, I believe, or Wednesday. You know, you go from being up money to, oh, we're up 25.85 all the way down to 2,500 or below in minutes. I mean, this is an hour worth of work here. You know, just gone. You put a position on in here. You were long because you're like, okay, we keep bouncing. I'll go long. You go to your meeting. It drops down. You come back and you're like, hey, what in the world happened to my position? I went to an hour meeting. The market wasn't moving that much. We were fine, and you know, so you gotta identify your strengths, your weaknesses, and also, are you able to get in and out of trades during volatility? And if you still want to trade this volatility, you know, you're gonna have to put limit orders in. Maybe, you know, limit orders for when you take profits, or limit orders when you want to take a loss. I technically wouldn't, with this volatility, I wouldn't put in a limit order for losses. Mainly because those get triggered pretty easily due to the fluctuation in pricing on the options right now. You know, I would definitely put in limit orders for profit if you can't monitor it. But for limit orders for losses, I mean, those could get triggered very easily in today's market. Hey Jeff, what's going on? I don't do with many positions, but for some I let them cook and take smaller massive profit. Yeah, Kit. So what Kit is referring to, he can let his trades simmer longer because he's more of a premium seller. So when you're more of a premium seller, you have more time. You want theta to work for you. You want that IV crush to happen. You have that time, you know. And when I put on IV trade when I sell premium, you know, it's definitely way slower than buying and selling calls or puts. It's definitely a way slower experience in that. And Greg, maybe that's good for you. Maybe you need that. And when I put that on, you know, I do a week out, 2 weeks out, or whatever the case is. But it's a way different experience than when you're buying and selling, you know, calls and puts. When you're buying and selling, especially in this market, volatility is swinging. Your option pricing is going from loser to winner to loser to winner to loser to winner. You know, and you got to be really in this type of market. You got to really be on it. And as you saw, you know, not taking profits is toxic. Not taking profits, you know, in any market is toxic. Yep, Crip got it. The best position sometimes is not to trade at all. Exactly. I learned when I posted trade on Facebook, UVH and Nick asked why I put the trade. So I questioned myself why. He asked the question. Yeah, I mean, people just put trades on and not understanding why they put it on. Like, it may sound like I think like if you woke up this morning and say, I just think the market's going to go up today, and you bought a call, that's not a good enough reason to why you bought a call. It's not a good enough reason. Like, what indicators did you use to get you there? Was it bouncing off support? Were you using that position to balance out your portfolio from your bearish positions? I mean, it could be a million things. Just buying things off the whim, you're gonna lose money. Like, just buying calls or just buying puts as the market's moving, you're most likely gonna lose. You know, I hate to say it, but I just want to be honest. You know, there's so many traders out there that aren't giving you the truth because, you know, I don't know if they're not making money or what, you know, whatever the case is, you know, but options trading is one of the hardest things that you can do in terms of the market. It's one of the hardest products to trade, you know, but it's also, if you're good at it, it's going to pay you the rest of your life, and it's also the most profitable product. I mean, options outpaces penny stocks, outpaces a lot, you know, buying and selling stocks, shorting stocks. You know, options is the way to go, but it's complicated. If you're not doing well at it, if you're not doing well at trading options right now, it's not because of, I mean, obviously you need to learn more, but options trading is really, really, really hard. It's supposed to be hard, and that's the way it is, you know, and that's why I compare it to starting a business. Like, option trading is really hard. If you've ever started a business, starting a business is very, very, very difficult. Starting a business from scratch is very, very difficult. Option trading from scratch, just learning how to trade option trading, at times it seems impossible. You know, you keep putting trades on to keep going against you. Keep putting trades on to keep going against you until one day it clicks, it comes together, things start happening, and then you start getting paid. And that's just the way it is. And that's just like life. You know, when you start a job, you got to get trained for the job. Options trading, you got to train yourself. You got to train your disciplines. But, you know, like I was saying before on options trading, it's more than just the numbers on the screen. It's who you are, what you can do, the time that you allow. It all fits into this formula. It all fits into it. So you need to know how to harness that. Option trading is a life skill business I plan to teach my kids long term, give them the financial freedom I never had. We all got to stay small, consistent, and positive mindset. King Jig, I don't get how people win at penny stocks. I mean, just like options trading, you may win for a short time, but eventually it catches up for you. It catches up with you. You know, long term, you got to think long term. Yes, we may lose a little bit of money today, but long term, we will be better off for what we do today. Long term, we're going to be better off. You know, me taking small profits, $100 at a time, is going to be way better than $1,000 at a time. It's going to be way better because my risk is low and I'm doing a repeatable process. It's way easier to get $100 than it is to get $1,000. You know, depending on how you scale up your trades and what your account size is. But I'm just saying, you know, $100 comes before $1,000 every time. So it's math. I know I kind of ranted here for quite a while. We got about 6 minutes left on the stream. Is there anything else that you guys want to cover? Any stocks you want to look at? If this video was of value to you, please hit that like button. I definitely would appreciate it. Hit the like, You know, Richard, Hamed, Kit, thank you all for your donations so far. Yeah, don't lose money. Refer to the first. Yeah, I mean, yeah. What does Warren Buffett say? Is the stock market is a mechanism from transferring wealth from the impatient to the patient, you know. But also, like what a lot of people do in the markets is we've discussed this before, is not following every analyst, not buying and selling what Warren Buffett is doing, because Warren Buffett's doing what's best for him, what's best for his portfolio, what's best for his personality, and that may not be even close to what you're doing. Shadow Jordan, appreciate it. Thank you. Kyler, appreciate it. Enjoy seeing these at the end of each day. Thank you. Thanks for the encouragement. I mean, I can't believe like people are watching. You know, when I started the live stream, I was like, well, I didn't, you know, maybe people, and nobody. When I first started, nobody did watch. You know, it's just like like I said, just like anything, you start slow and it builds. Just like your option trading account, it starts small and it builds over time. I've been an impatient wealth donor. Time to take it back. Get it back, Kit. You got this. Crip, I really want this 500 Robinhood account to grow for the long term after losing the LMKK. Crip, I will be honest with you, and pretty much everyone here, if you're actively trading options, you know, Robinhood is definitely not the place to do it. If you're day trading, if you're day trading options on Robinhood, it's not where you're going to make back that 11K. I'm just being honest. And obviously that's just my opinion, but ask around, join our Discord, join our Facebook, and they're going to tell you how much money they lost on Robinhood. And it's not because they were bad at trading. Gunther, fellow Chicagoan, nice to meet you. Glad you're here. Stay warm, stay dry. I'm trying to get to 100 profit a day. Gunther, for people that set targets, I think it's very dangerous to set targets like that, whether it's $500 a day, $100 a day, $50 a day, $20. I think it's very scary because when you don't hit those thresholds, you force yourself to make decisions that you ordinarily wouldn't do, and ultimately causing you more losses and more mistakes. And that's why I don't like to set those. I like to trade the market as the market is. It is. Some days are better than others, and that's just the market. Some days you're green $500, and some days you're not. Some days, you know, you tried really hard and you only made $10. Some day you didn't try at all and you made $1,000, and then some days you just lose it all. So setting targets like I need to make $100 a day or I need to make $50 a day or whatever the case is, I think is very dangerous for your mentality and will eventually cause you to make more mistakes than you originally would have. And, you know, that's just the way I see it. I mean, you may see it somewhere else, but I'm just giving you my opinion. So have a plan, but no, Micah, have a plan, but a goal for that particular trade, not a goal of how much you can make. You know, this IBM, and when I say this IBM trade, you know, have a goal of, okay, I bought the 111 call. I want to close it out when it hits 112. I want to close it out when it hits 112.50. I mean, that's entirely different. So goals within the trade. I think it's very dangerous to have a overall daily goal of how much money you should make. Do it twice. Yeah, YOLO Fire's been around. He's got some Robinhood stories. So I mean, I know because what happens if let's say for instance, if you set a $100 goal for today, and you only made $50, you're gonna force some trades in there that you didn't normally would have put on. It's best not to do that. Crip, I believe in you. You can do it. Stick around. Let me know. Keep me updated in your process. Lebowski, because a plan would be stupid. I'm not sure what you're referring to. Plans are good. Goals are good, but forcing overall profit per day is bad. Because every day the market's different. Some days it's easier to make money in the market, some days it's not, and that's just the way it is. Just be grateful. Be grateful for gains. Make 50 twice. FC, or you can make 25 4 times. Up to you. Or we can keep breaking this down. Yeah, I mean, Robinhood, the thing is, like, people have been messaging me, especially volatility. You know, the one thing, the number one thing that Robinhood lacks is support. When things go bad and you don't understand what's happening, Tastyworks, TD Ameritrade, E-Trade, they have a very good support team. Robinhood cannot afford to host that kind of help desk or support team. So when you are margin called or when you're exercised or assigned something and you don't understand what's going on, Robinhood, they're gonna confuse you. You're not gonna get back to you right away. But if you pick up the phone and call Tastyworks, or you pick up the phone and call TD Ameritrade, if you pick up the phone and call E-Trade, they're gonna have an answer for you. And not only will they have an answer for you, they will help guide you close those trades for you at the best price that you can get in the position that you're in. So that alone is worth the dollar per contract. You know, especially when you're starting out and don't know how to do this stuff yourself. Especially when you're starting out. That alone is worth it, because Robinhood's going to cost you money waiting for them to get back to you with an answer. Meanwhile the market is moving, you're losing more money, and you get the idea. So you're going to have to give us a Coke too to cool off from the day. Ray Lee, welcome. Tesla Keela. Is Tastyworks a better day trading platform for day traders? I do lose money day trading with art. I would say so, yes. As you can see, I use Thinkorswim and I use Tastyworks every day. So we're over an hour. If it's your first time here, hit subscribe. If this video was of value to you, hit the like button. Definitely appreciate you guys hanging out with me for an hour. It was pretty much just like an hour rant. I did go over my trades. If you joined late, I did go over my trades at the beginning of this video. Check them out. We're chilling. Max, say bye. You know, we're gonna see what the futures are tonight, and trade accordingly. Close out the year green. Stay safe. Stay green. It's always us versus herd.